Saturday, September 24th, 2016. Maneko 64 here, home of alternative economics and contrarian views. So this past week has been an important week in terms of policy making for our central planners, specifically the central banks. And believe me, I'm not for central banks. You might be a new viewer and think, oh, this guy is talking about our central planners, but I'm not. So what I take from this week is that for the umpteenth time in the last 2 years, or even before that, even in 2010, a year and a half or so after the Fed started its extremist monetary policy of zero interest rates and money printing, every year we've been listening from Wall Street economists, from the mainstream media. We've been hearing that, oh, the Fed is going to normalize interest rates. They're going to start raising rates. This has not only been in the last 12 months. This has been the whole last 8 years, I would say. After 2009, when they started doing QE, people were saying, oh, they're going to normalize rates in 2010. They're going to start raising rates. And they never did. If anything, they've ratcheted up QE. They've done more money printing, Operation Twist. And then they had their tapering, yes. But it just goes to show, in my opinion, that the Fed and the government, should have allowed things to correct naturally in 2008, 2009. Of course they didn't. Politicians don't think longer term. They think in the next 2, 4, 5 years because they need to get reelected. Because they're not there really serving the public. They're serving themselves. 99.9% of the politicians, I would say. The only one that I knew who didn't think like that was Ron Paul, but he's retired now. So what I'm trying to say, what I got from this week, especially from the Fed, is that I'm sorry, it hasn't worked. We've had since 2000, since the dot-com bust, the U.S. economy and all the major Western economies, and even emerging markets, they've been pushed into this policy of consumption and credit. Of course, there's manufacturing and production in the world, but these Keynesians seem to think that to have a strong economy, you need people to borrow and spend. And they forget the old Austrian School of Economics adage that every consumer needs to be a producer as well. We can't all be in debt. So we've continued. So if we look at the major economies, US, UK, Western Europe, if we look at them as a business, basically we are a credit company. And why do I say that? Well, excuse me, the consumer is almost 2/3 of the economy in the US. Maybe, I'm not sure exactly in Europe and other countries, but pretty much the same in the UK. So the consumer, we are a consumer credit business. Our economies have become that. And one of the reasons why they've become that is because we have a fiat money system where money is debt. And the only way to continue the system, you need to keep increasing the debt. And how do you do that? How do you make people take on debt? You make them consume and spend. There's not a problem if people consume and spend if they're working and earning. There is a problem though if they're out of a job and they need, and how can they borrow money if they're out of a job to consume? They can't. And I talked yesterday about, labor market, how that the Fed, Boston Fed president said that workers might overheat the economy. But as I said, 90, almost 95 million Americans that could be in the labor force are not. That's gone up by about 15 million in the last 8 years. So how does that work? You know, we've gone, from a destruction of the system almost in '07, '08. And then they try to rebuild the same system that failed based on credit and debt. But there's 15 million less people working. How do they expect that business to succeed? It doesn't. The only business that has succeeded in the last 8 years has been the financial sector, because in order to, try to keep the consumer credit going, the Federal Reserve and the government, they've set up policies that help asset prices, i.e. QE, zero interest rates or negative interest rates in Japan or Europe. The standards of giving people loans have lowered. So they've tried the same business that failed in '07, '08. That was more based on the real estate or property market. Now it's based on financial assets to try to keep the consumer spending and borrowing, but it's not working. And ever since 2010, we've been told, yeah, the economy is recovering, is doing really well. We're going to start raising interest rates. Unemployment is 4.9%. And what I take from this past week is that it's all unraveling now. And it's just like a business. And I've experienced this before, and it's not nice. I've started my own business. I didn't borrow, but I put money into the business, and it went fairly well, but it didn't grow enough to justify having the business. And I would have had to put more money into it. So what did I do? I liquidated the business, took my losses. So that's the same thing that's happening now. And I think the financial markets are an indicator or, a signal about the business of the West and the United States. That business is failing, the business model. The business of consumption and credit has not worked. And there's couple of interesting articles I've seen on Zero Hedge. One of them is about the ECB, and it says ECB embarrassment. 18 euros in QE generated just €1 in GDP growth. So I'll put a link to that story. So that's another example. Let's say I start a business and I put £1 million in it. Not that I have £1 million, and then I only get £12,000 return after the end of the year. Should I keep that business going? I don't think so. And the other article on Zero Hedge that I saw that's interesting and proves the point I'm trying to make here is it says it's about the New York Fed, and it says New York Fed slashes GDP forecast, now sees weakest growth since financial crisis. So very interesting. They revised the GDP growth for the third quarter and fourth quarter down by 0.5%. So now they see third quarter GDP at 1.2 year on year, and fourth quarter, they see Q4. They actually see third quarter at 2.3, and that's down from 2.8. And the fourth quarter, they see it at 1.2. That's down from 1.7 they forecast. And I bet you anything that in a few weeks' time, they're going to revise that down even further. And to make things worse, the first quarter of this year, GDP grew by 0.8% year on year, and the second quarter, 1.1. So now, we're going to see, it looks like we're going to see growth at 1.4% for the whole year. And these guys, they've been predicting like over 2% GDP growth. They're deluded. They don't realize that, the business model for the economy hasn't worked. The only thing it's worked is for wealthier people who have a lot of assets. Their assets have gone up in price, the financial assets. So yes, that's what I take from this week. Bank of Japan, I won't even mention. That's a total failure, in my opinion. How can they expect to be able to steepen the yield curve? That's a stupid cockamamie idea, in my opinion. So there you have it. When this liquidation of the consumer credit business will happen, I don't know. There's a lot of people saying that it could happen in the next week or two. That's, about they're talking about the Jubilee, and I've listened to it. I keep an open mind to everything, but I'm not counting on it. I'm not, betting on it that the stock market is going to start crashing now, but it could happen anytime. Now, within the next few weeks, within the next year or 18 months. You never know. These guys can keep things going for a long time. They have for the last 8 years. They've fooled everyone. But I think the take for this week is that the business model of the Fed and the politicians, or the Bank of England and the politicians, that business model of consumer credit economy is unraveling, and pretty soon there's going to be a liquidation of that model. And what that means is a liquidation of financial assets, which means a correction of stock markets, bond markets, everything. And what do I want to have when things are being liquidated? I want to have cash, real money, gold and silver. So I stick to that. Mining shares as well, they might get caught a little bit in the wake of the correction, but medium to longer term, I think they're still a good investment. They are speculative nevertheless. So there you have it. If you like my video, please share, and also subscribe to my channel if you haven't yet. And if you'd like to donate to my channel, there's a few links below in the description. You can donate in cryptocurrencies, Bitcoin, Ethereum, or through PayPal and Patreon. Thanks for watching. Bye.